CNI Leasing plans to tap into the bond market next year to scale up its operations and business model. At the facts behind the figures on the Nigerian exchange, the company's group managing director, Lenin Ugoji, says a plan for capital raise depends on the interest rate trajectory. Take a look.
In terms of the key drivers behind the facts behind the figures, I think it's largely been to three major factors. One, cost optimization. We've focused a lot on optimizing the assets that we have. CNI has the advantage of being an old company, so we've been acquiring assets for quite a while. The current economic environment does not really support purchase of new assets. So what it means is that you have to probably utilize the assets that you have in much more efficiently. So I think we've been able to do that over the last 2 years pretty well. And I think that's what we are seeing in that respect. Also is in terms of what we call cross charters for our marine business. So the marine business actually had some downturn over the last half decade. And what we focused on was utilizing our brand to be able to attract other, marine service companies who did not have maybe the kind of reach that we had. So what we did is that we utilized that to secure contracts and utilize their assets to execute those transactions. So in effect, we were making some margins on assets that were not even ours. So it was quite profitable in 2023, and it looks like it's going to be at the same 2024. In terms of the third plank, I think I would say is in terms of innovation in terms of the fleet business, because what we've also seen is that we've started to look at other aspects of powering vehicles. Why? Because we think that the future is clearly going to be about that, especially with the removal of subsidy in Nigeria. So the average cost of fuel in a vehicle has tremendously increased. So those are things that I think we have that helped us.
Yeah, because I can imagine the operating environment here and the headwinds that you're facing. I'd like to know then how you're working to navigate these headwinds and more or less how that is impacting your pricing dynamics.
Yes. Okay. Yes. It definitely is hitting the pricing mechanism, and we do have a bit of a challenge because as it's hitting the pricing mechanism, this is also eroding the capacity of the consumer to actually pay for the service. So I think the onus is on us to look for more and more ways of reducing the overall cost of running the operations. And that requires us to, for instance, do a lot of what I call collaboration. So we've decided to look at ways for things that we can get partners that can do things that we also utilize, but more efficiently, so that we outsource that to them and also carry out the same on our end. We've been able to get 1 or 2 partnerships in that regard, like I said, with regards to the marine business, and it's bringing some dividends that we can at least start to see the beginning of. Yeah.
Yeah, because we were very keen to know how the segment of your business are performing. Yes, you do fleet management, also outsourcing business as well. Speak to how these segments are holding up.
Okay. Well, I think the marine business in particular has witnessed a significant turnaround. We have had in 2024 a much more profitable operation. It has been a mixture of operational efficiency and also benefiting from foreign exchange earning capacity of the business. So that has helped to create some resilience for the business in that regard. In terms of the fleet, I think it has largely been about optimization and innovation. So we've tried to, like I said, utilize the older assets, much better, and then be more aggressive really in getting clients to see the need for utilizing these assets, in different ways. For the outsourcing business, there has been a significant challenge, right? And we all know that because in terms of employment, we've seen even a lot of manufacturing companies leave Nigeria, and this has also affected us. We have decided to also go now towards what we call the high end of the personnel outsourcing space, because we think that those type of recruitments are going to be much more needed in the future, and of course they provide a larger charge base in terms of revenue.
All right, now, so we see that there's a new chairman in place, some more firepower to the work that you're doing here, and I also understand that there's a bond issuance in the works. Can you speak to this and how more or less CNI Leasing is planning for the future?
Okay, yes, Dr. Samuel Onyishi has actually been a shareholder in CNI Leasing for, I think, over half a decade, actually. But he did come on board as chairman about 3 years ago. And he also took a significant investment in the company to be able to help it navigate some of the challenges that was having at the time, because we did have a convertible debt instrument that was being held by Actis, and so he acquired that debt note and converted it to equity, thereby giving the company some breather in terms of ability to raise capital, which is one of the reasons why we are also wanting to engage with the stock exchange, because we are looking at futuristic capital raises, which speaks to, for instance, the bond program. Would have gone for the bond program in 2024, which was part of our plans. However, we can see the trajectory of interest rates, so we think that the timing for that would have to be pushed forward. So we do expect a bond issuance sometime in 2025.